So I'm Jeff Horowitz. I head up the Bank of America Merrill Lynch's real estate and gaming and lodging group, and I've got the distinct pleasure this year of a little bit different twist of a topic than I've had in the past. The last 2 years, the topic has been disruption in the sector, but today we're turning it around and we're saying REITs as disruptors. So it'll be interesting to talk a little bit about what many of the folks in our industry are doing as we move forward in the world. And I think one of the key things that's interesting to me is there's always this focus on technology as disruptor, but there's other things that are disruptors too, whether it's supply or demographic changes and the like, and we'll get into some of those things today too. And to join me today on the panel, we've got a really interesting group, very different sectors, which I thought was kind of fascinating. So we've got Bill STEIN from Digital Realty. We've got Joel Marcus from Alexandria, Steve Tanger from Tanger Outlets. We've got John Kilroy from Kilroy Office, and we've got Glenn RUFRANO from VEREIT. And what I thought I would do today is start out first by spending a little bit of time with each panelist before delving into some questions that really hit them all, with the goal of giving you a sense in different sectors of what's happening and how they work. Because some of these sectors I would call are on the forefront of technology change, and some are traditional and making a lot of different movements. And so I'm going to start with Glenn, because when you think about Glenn's company at first, it's a net lease company. And they've got an average lease length of probably 10 years or so. And when we think about change and we think about disruption, I thought it'd be interesting, Glenn, just to start with you, like what keeps you up at night and how are you thinking about some of this?
Thanks, Jeff. You know, we did this last year, and this is a little different. But this year, I thought I'd look it up. What does disruption mean? And it means turmoil and disorder. So I'm better prepared this year than last year. When I think about turmoil and disorder for our businesses, I always think about the left side and the right side of the balance sheet. So where can they be? Where's disorder? The right side, I just listened to the last panel. I actually think the one element on the right side that can cause disorder or turmoil is rapid increases in interest rates. I think that's okay for a while. I'd be curious what everybody else thinks. But let's assume that part of it, to make it simple, looks better. The left side, though, those are our assets, those are our tenants, that's rents. Because there we care about people paying rent. So if I were to look at a balance sheet, if people pay rent and interest rates stay relatively stable, don't go up a lot, I think we don't have a lot of disorder and turmoil. I feel pretty good. But the left side does cause some issues today because we know there are trends that are changing and we have to follow them. The next way I'll think about it is from a macro standpoint, I'll never figure out all those changing trends. There's nothing good about being old, but one thing that you know about being old is that you can't figure it out. You just can't figure it out. So you better have a macro view on how to deal with uncertainty in the long term. As Jeff said, we are, I call it a single-tenant business. We have 4,000 assets in 15 million, so that's an average of 4 million a property. A lot of granular assets. The best way that I can think about disrupting the disruptors is to be diversified. So if we're diversified across geographies, across property types, and we have smaller assets so that we can't be wiped out in any single wave, whether it's a hurricane or something like that, I feel better. It's a macro view, but that view is what's guiding us. We want to be diversified so the disruptors can't get us in any significant way on the left-hand side of the balance sheet.
So scale helps from that perspective.
In our business, scale helps a lot, and we can have a lot of properties and have big scale, but because it's mostly triple net, not huge cost to run the portfolios.
Gotcha. So Bill, your business is a very different extreme. So if we were here, I think Adam said last night that this conference has been going on for 25 years. Well, 25 years ago, your sector didn't exist, right? And when you look at some of the biggest REITs in our marketplace today, they didn't exist. Their businesses weren't around that long ago. And so as you think about the growth trajectory you're on, which has been quite significant over the last handful of years in particular, you know, what's next? What allows you, given your scale and presence, to think a little differently? You know, I know on the last panel, Ron just mentioned something about local businesses and the importance of it, where you have a very different customer base, you're going with them different places. How do you think about that to avoid disruption and to keep progress moving forward at this kind of pace?
Well, we're very fortunate that we are a beneficiary of the technology disruption that has affected a number of industries over the last decade or so. I would say principally e-commerce and the cloud business. our business has been levered to those demand drivers, so that's been very good. In terms of where we're going, I mean, we can see that our customers, and these are principally North American customers, have pushed out not only into Europe and Asia, but now they're pushing into emerging markets, which is why at the end of this past year, we acquired the largest data center company in Brazil, Ascenti, in a joint venture with Brookfield. And we'll be looking to do similar things in emerging markets over the future, because that frankly is where our customers are moving. I mean, a statistic that our folks gave me, which I'll read here, which you'll find phenomenal. Every 60 seconds on the internet, more than 156 million emails are sent. More than 87,000 hours of video are consumed on Netflix, and more than 5 million apps are downloaded. So the growth, I'd say the disruption from our standpoint is just the extraordinary growth. And how do we keep up with that? And we're fortunate that we have created the scale that we have over the last, well, really 15 years of our existence. And that will allow us to support our customers' growth, we hope, in the future around the world.
Gotcha. And so, Joel, your business also is quite different. And if we went back in time a while ago, it's changed a lot, and dynamics have changed a lot. And there's really only a couple of players of scale and substance. And so you've built some very natural barriers in terms of how you've created your business. Why don't you talk a little bit about that and what that means as we go forward for the companies in your space and the tenants in your space?
Well, maybe to start out with, as Bill was saying, what really drives the demand in not only life science, but technology, and then on Monday we announced a big push into the ag area. Probably 2/3 of everybody sitting in this audience has some form of chronic disease. It's kind of amazing, whether it's a metabolic disease, whether it's a neuroscience disease, hopefully not too many. 2/3 of the population, adult population, have a chronic disease, and ultimately they have to solve that either through medicines or some kind of nutritional change. So that is really a backdrop, and we're in the early days. As we often say, there's about 10,000 diseases known to mankind, and we've only addressed about 500, and most of which we haven't addressed very well. So if you think about data in that world, and you think about the human body in that world, we're still in the early days. So when we think about our business, there are really two areas within a laboratory. If any of you have gone back to high school, or in your days in high school or college and you worked at the bench, there was kind of the chemistry side and the biology side. Chemistry is more process, biology is more inventive, and probably the biggest disruption we saw early on was the movement of a lot of process chemistry overseas. So we in fact went overseas, but then realized it kind of sucks being overseas. So Bill deals with these things, but there are things known as the Foreign Corrupt Practices Act, currency value fluctuations, taxes, things like that. So we decided to retrench from that and focus on the U.S. because there were a lot of opportunities. So that's something we noticed early on as a potential disruptor. We have a group inside the company. If you remember back to when I don't know how many know what the SR-71 is. It's a super secret spy plane that was, operating over the Soviet Union for many years. Well, that came out of the skunk works at Lockheed and Burbank. So we have a group that spends most of their time trying to understand in life science, technology, in the ag tech area, where disruptions are coming in those industries and how we can not react, but hopefully proactively preempt reactions. And so that's how we kind of think about it. So to Jeff's question about fundamentals of our industry, we also made a pivot back in 04, 05, and 06 from a single asset company to really what we call a cluster-focused company. And we focused on San Francisco, we focused on Cambridge, and then here in New York City. And I think just being in those markets, as almost everybody on this panel, and certainly many of the people on the first panel will tell you, if you're in really dense urban environments, there are natural barriers to entry, because no matter how much money you have, you can't just come in and buy assets or develop assets. So it actually created a natural barrier around what we call our kind of scientific and technological clusters.
Okay, and so let's move into some of the traditional sectors. And John, you obviously have done an awful lot of development, and you've spent a lot of time thinking about markets to go into. When you think about disrupting the disruptors, for argument's sake, how do you think today differently than you would have 5 or 10 or 15 years ago, either about location, who's in the space, or what you're doing to the space to try to keep folks out and keep that presence the way you'd like to?
Yeah, well, though it's a changed world, and I think 10 years ago or so, I started talking about how we were going to go more urban, less suburban, bigger floor plate, higher ceiling heights, all these different things. And there has been incredible disruption. And I think there is a recognition increasingly that a lot of the office stock in the country, including in this city, is becoming obsolete. And if you think about it, what we've done is the average age of our portfolio is 10 years now. And that's because we've done so much development. And as it relates to the technology companies, they are the disruptors. And so you can sort of look at disruption and say, I can be afraid of it, how do I defend against it? Or you can do what some of us have done. Joel's done this in his company, we've certainly done it in ours, and that is embrace disruption. How do we work with them to accomplish what their goal is, which is to attract and retain their most important asset, their people? And what kind of facilities, what kind of locations, what kind of amenities, and then what kind of services. So I know we're going to talk later about some of the technology changes that we're all embracing, but we're doing all of that, and we're doing it at an incredible scale. We have a group within our company that just meets with all the tech companies. For an example, we did a deal recently for the headquarters of Cruise Automation, which is General Motors, and we've been meeting with them and others. What will autonomous vehicles do with regard to the way we own office buildings or whatever it might be? How should we be thinking about these things differently? And so it goes on and on and on. And if you don't have that kind of R&D, I think you're basically going to be an also-ran. Because once you get into that ecosystem, they think of you as one of them. They think of you as a technology partner. We never talk about office space. We hardly ever talk about rent. We talk about economics ultimately, but we talk about workplace environment. So it is a total different world out there.
Mm-hmm. And Steve, obviously retail gets a lot of press. The first question I guess I'd ask before I get into it is what's your occupancy?
Our occupancy at the end of last year was 96.8%.
Right. So in the sector that is always the one that gets the most press, 96% occupancy, which says you're doing something to keep the folks there, right? So talk a little bit about some of the forces that you're doing proactively for the future. Obviously, a lot of people focus the most on space and the internet, et cetera, but what are you doing to create the kind of environment that has a 96% occupancy rate and to continue that way?
Well, first we focus on our customer. We want to thrill them every time they come onto our properties. The retail market, I guess, is the poster child for bad press today. The phrase that retail is dead is in bold print above the fold on front page. Of course, it's not true. The biggest complaint we get today is there's not enough parking on our properties. As Yogi Berra said, nobody goes there anymore, it's too crowded. I guess that's what retail is. There's a retail renaissance. The e-commerce that's been mentioned a lot as a disruptor. Obviously, it'd be naive not to study e-commerce and see how it's going to affect the future. But I've been doing this a long time. 20 years ago, e-commerce was called .com. And there was a company called Bluefly that had a famous ad, shop in your underwear. No need to go out. Today, there's basically buying and shopping. You can easily buy dog food and diapers efficiently at a great price online, but to go shop for an emotional item like clothing and shoes, you still need to go try it on.
And do you curate the property differently when you think about a new property today, when you think about tenants, as opposed to just filling the space? What do you think about differently to keep folks out, so to speak?
Again, our focus is on the consumer. we do a tremendous amount of surveying to understand what type of products they like. There's been disruption in the department store space. Fortunately, we don't have any of the department stores, so we're not dealing with that. There's been disruption in the type of products being sold at retail. We've stuck with the very best brands sold direct to the consumer. That's the simple and elegant business model which has helped us survive over all this time. We're the only sector where you can buy direct and cut out the middleman.
So John, you said something very interesting to me, which I've been kind of posing at a lot of people when I meet with them normally, which is this concept of having a team of people internally to both deal with technology and think through it and how to apply it. Where do these people come from? Where have you hired these people from? And I don't know if everyone has a team or who's driving technology at each of your companies.
Well, it's a good question, and it's evolving. We approach it sort of from 4 or 5 different areas. We used to have what we called our IT steering committee, and that was basically how you deliver financial information and how you provide security. And we had to basically take that group and say they're a subset to a bigger group, because that's not what we need to do. Everybody needs to work securely from wherever they're at. Business is 24/7, it doesn't matter where you are. So when you start with that mindset, you've got to be secure, you've got to have the information, but then you also look at it from our activities. We have people that come out of the accountancy side, that are the consulting side with regard to technology. We have folks we've hired from tech companies with their recommendations as to their expertise in various areas. And then we're constantly dealing with our tenant bases about what are they thinking, how should we be thinking about this. I have a meeting next Monday with 2 of the biggest VCs and one of the top angel investors in San Francisco. And our whole subject is they want to know how they should be thinking about facilities differently. We can provide information in that regard. I want to get from them, and they're prepared to talk about it, what we should be thinking about differently. And we have that meeting every 3 to 6 months. And so it's a top-level thing. We have it in our board. We have a woman on our board who was the chief marketing officer for Thomson Reuters when she was 21, for AOL when she was 23. She is technologically beyond anything I've ever seen, and she helps quite a bit as well. So we approach it from a development standpoint. How should we be thinking differently about design and how technology is going to help us? We have an expert at that. We think about supply chain. We're looking in the factory floors in China and have technology that we can actually see what's going on and how they're doing in the delivery systems so that we can't be interrupted. We see it in the construction side with regard to, we now have our teams with early AI devices in their construction helmets, and I think you'll see every construction person on a job site within a few years with that kind of device. So you get real-time decision making. And then we've taken it to our operations. We've totally changed the way we interact from an asset management or property management standpoint. We've taken it to our visualization of projects that we're thinking about. So it's a broad base of people. It's constantly changing. It's getting a lot of input from the leading disruptors of our day.
And Bill, when I think about digital realty, there's obviously a lot of people who have a very strong real estate background. And how have you changed hiring? Where have you gone to have, obviously, a very strong technology background, too? Obviously, a lot of folks with a real estate background learned a lot about technology. But how have you thought about that when you recruit right now?
So it's a definite blend, I'd say, at the top of the house and all the way down. And at the very top of the house, even on our board, we have 3 directors that have clear tech and telco backgrounds. In terms of executive talent, we have the traditional chief information officer who reports to our CFO, and he's been a CIO for a number of firms in the Bay Area. We have a chief information security officer, so cyber risk. He reports to our head of operations. We recruited him out of Microsoft, where he was responsible for cyber risk in Asia Pacific for Microsoft. And we have a chief CTO, Chief Technology Officer, who reports to me. We recruited Chris from one of our competitors in the Bay Area. And then under our CTO, we have a number of interesting functions. So first we have innovation, so R&D, which is obviously very important for us. We have sales engineering, which supports our sales efforts from a pure technical standpoint. We have solution architects who help us understand how our customers are using our space. We have design, so how should our product be designed to meet current needs as well as future needs. And then we have product management, product strategy, and product marketing, all under our CTO. Finally, our sales organization consists of people who've sold technology products, software and hardware. I don't think many of them at all have a background in leasing real estate. And our current head of sales, again, came from one of our competitors. But most of our salespeople have come from companies that do what we do.
So if we were sitting here 20 years from now, for argument's sake, I know there's a whole different group of people here, from investors to other companies to students. And if you guys were giving advice to some students, what kind of person 20 years from now would be running your company, do you think? Do you think they'd have a real estate entrepreneurial background? Do you think they'd have a tech background? What kind of background do you think they might have? And what would be the way, or some of the things these people should be thinking about if they want to pursue a long-term career in this, to make sure they're really well positioned? Glenn?
I would hope they have a real estate background.
Oh, I don't know if anyone can hear you.
I'm sorry. I would hope they have a real estate background, because we're real estate companies. I'd have to start there. But you would need the services within the organization to deal with the changes in the environment over time, which I believe we have consistently done. I don't look at the history of real estate over the last 10 years and say we've done nothing. My sense is we have continually tried to upgrade our staffs for the, what we'll call disruption, or the technology changes which have occurred. For instance, internally, we're talking about technology, but there's an internal component of technology. You know, for instance, we continue to work hard with an enterprise system within our company to make sure we have a relational database to get information timely. And I've been doing that for 20 years, and it's getting better and better. And today, we as a company, I'm sure all of us, will continue to have technology internally so that we can respond to the marketplace internally very quickly. I don't think we've ever not looked at our tenants and said, how are our tenants reacting to technology, and are they changing, and are they competitive? If they're not competitive, we don't want them. So from my standpoint, I would have thought we'd have a real estate person, but within the organization, we need to make sure the organization is creating a technology internally to compete with everybody that we're competing with, and externally understanding everything about our tenants so that we can react to those changes and have real-time feedback as to how we house them long-term.
Mm-hmm. Steve, what would you say?
I think it's a blend of technology, understanding how to reduce your costs, which are ultimately flowed through to our tenants. Our cost of occupancy at 10% has historically been the lowest in our sector. We're doing some interesting things like robotic processing automation to do rule-based, repetitive things like taxes, accounts receivable, accounts payable. We're using chatbots to communicate in our service area with customers. We're using artificial intelligence to understand how to better communicate and market our product to drive traffic. But ultimately, we need to reduce our costs to make it more profitable for our tenants. Second, they'll have to understand real estate, and they'll have to understand who our ultimate, we have two customers. One are the retailers, and second are the 190 million consumers that come to our properties every year. They'll have to understand how to communicate with them and also who they are. Mm-hmm. So I think it'd be a blend of both technology and real estate.
Mm-hmm. So Joel, you've been doing something for a long time, which I think others have started to some extent, but not quite the same way. And that is have a pool of capital to invest. outside of your general real estate business, meaning in venture capital investments or whatever it might be. And I'm going to guess that, that all of you or your companies are approached very regularly by people with new technology, trying to figure out how to either put that technology to use in your assets, or show you why you're supposed to do something differently, et cetera. And you started pretty early trying to figure out how to also make some investments in those. And I don't know as much if you did them as good investments, you did them because it helped drive the business. Talk about that a little bit, and then I'm going to get into a few others about how that's changed their mindset over time.
So we started the company really as a pure garage startup in '94. We had a business plan, a financial model, and $19 million. We had no real hard assets. But, and our goal was to try to get break even within about a year and a half so we could try to start paying ourselves.
That worked pretty well.
But we almost immediately, in 1996, we made our first venture investment. And it was done because we felt that the only way we could keep up with the knowledge base, the rapidly evolving, as Bill talked about in tech, certainly in science, it's a rapidly evolving field. And there's no way you can actually understand it until you'd almost be looking in the rearview mirror, in a sense, or if you didn't understand and weren't at the leading edge of discoveries. And the only way to do that is to be at the leading edge, and the only way to do that is to be really part of companies that are being formed that are highly disruptive in all kinds of different areas. And so we've been doing that for now since 1996. We came public in '97. And it's pretty instrumental to what we do because of the knowledge factor. Most of our investments actually are non-tenants, so we're not trying to drive a tenant base with an investment dollar. It really is, how do we stay at the leading edge? How do we know as much? John talked about, and I commend him, I'm highly admire Kilroy, because they really do think ahead of the curve. And we try to do the same thing. We want to be not only be at the table with venture people, but actually we want to know as much or more than them. I actually have some venture people calling me saying, this just happened about 2 weeks ago, oh, have you heard of this company? It's in stealth, and we kind of heard that it's coming out. It's in a particular area of AI as it relates to drug discovery. What do you know about it? And so we have people asking us. We happen to have actually been involved in it, so we had some information. But that's where we want to be, at the leading edge of the very breaking point of science.
Yeah, and John, my suspicion is that both given where you're located and also given how much development you do, that you're a prime target for folks to constantly call on you to try to figure out how to apply some new something to your assets. What are the kinds of things that generally they approach you about? How do you think about either helping make their technology that much more prominent when they see a big user? Do you get benefit from using something? How do you screen it? Do you invest in it? How do you think about some of that?
We haven't been investors, but you're right. We're approached all the time, and that comes through multiple things. It comes through the VCs and angel investors that we do business with regularly with their stable of companies. It comes directly from various organizations. It sometimes comes through the investment banking world, and in other multiple ways. We haven't done any direct investing. We have employed a lot of technology across the board, whether it's in the development or whether it's in asset management, whether it's in visualization and marketing. We would literally, right now, if we were sitting down with a client and they said, we're thinking of this kind of facility, 650,000 feet, maybe it's 2 buildings, blah, 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 we can turn around in 12 hours a rendering showing that space that is pretty, it used to take us months to get there with architects. It is amazing, the technology. And from that, you can have a real-time discussion about, okay, we like this, we don't like that. So we're embracing all that. We're not investing in it. One of the things that I've been concerned about is that technology is changing so quickly. There's so many competitive products that how do you know you're banking on the right one? We have a little different business model than others, but we're embracing it all the time. Now, we're also doing things collaboratively with some of our clients as well as universities with regard to various studies. Kilroy's become the leader in, I think, 6 years running in sustainability in the United States and one of the leaders in the world. Well, same thing with wellness, et cetera, et cetera. And Harvard recently approached us, and they're doing a worldwide study on productivity with regard to air quality and a variety of other things. We're their real estate partner in the United States. And this is where literally our folks that volunteer to do this are wearing these devices that monitor a whole series of things. So we're engaged in this culturally. Whether we become engaged in it as an investor directly in the technology, Jeff, I don't know. But I think of us as being investors in many ways because some of the startups or some of the unicorns or whatever they're called today we're invested in them. They're our tenants.
Right.
So.
Right. And is the biggest theme sensors about how space is used? Is it about air quality? What's the biggest theme that people are pushing? And I'm going to ask all of you this question about, there's a question before about size helping. Are small companies able to do these things? Is size a real advantage? Is access to capital like that a real advantage? Or is maneuverability on a small level helpful?
Oh, I think you got to have both. I mean, I think I always think of it this way. If this glass right here represents where we're at and people are trying to get there, you've got to think about how you're going to continue to move forward. And technology is part of that. Obviously, being agile is part of that. And I think the modern company, at least from our perspective, has got to be never lose its grittiness, never lose your ability to outmaneuver. Never think of yourself as like I know most of the people in this crowd don't know what one of these is. Everybody up at this table would. They used to have a thing called a PT boat in World War II. It was a very fast, little, small boat. And then you have aircraft carriers. Well, one moves very slowly, one moves very quickly. You want to be the PT boat, even if you're big like an aircraft carrier. You just have to have that mindset. I'll let others, we've all got answers to the same question that might be different.
Since he tapped me, I'll go.
I'll
take it over. I'm not sure it's size. I'm not sure it's size or not, but I think I would say it's resources, and I'll just call it brain power. For instance, if I took retail, if we think of retail today, in the olden days, you'd say a retailer had to have value, and value was price, depth of merchandise, and service. Right? They had to have all three. Today, that service component is really expanded. Of course, you have to have a good price. Of course, you have to have depth of merchandise, but service is really different. Service requires resources. For instance, service is no longer smiling at the person who comes in the store and say, hey, what do you want? Service means you have information on that person coming in, you know what they want, you know how to deal with them. Service means you have an e-commerce capability, which is servicing your client in a different way than coming for the bricks and mortar. In order to have e-commerce, you need resources. Mm-hmm. And if you don't have resources to invest in e-commerce, then you're not going to be there. And you have to have the desire. You have to know you need e-commerce. You have to have the resources to invest in e-commerce. And you have to know to what quantum. TJ Maxx is probably fine at 5% e-commerce. Staples is 50%. So you have to, as a tenant, not be large or small. You have to have the brain power as a business, have the brain power and the resources to compete long term. If you do, that's the tenant we want. If you don't, it's not the tenant we want.
Mm-hmm. And Bill, in your space, you're a clear leader in it, and I presume, talk a little bit about your tenants are a little different because it's not just a local tenant. You can have tenants in multiple countries and the like. How is that a real factor in winning business? And again, disrupting disruptors, staying ahead of the small guy who can't really access the same tenant base and the same probably technology as you can.
Sure. I mean, obviously I'm talking my own book, but I think scale is critical in our business. We're selling a global platform. Our customers want to get their data centers up as quickly as possible. So speed is essential. the fact that they've done business with us in multiple markets around the world, that there's a single piece of paper that they use to do business with us. It's fill in the blank and attach a few exhibits. That might be oversimplifying it, but it's a lot easier than starting from scratch and taking a couple months to negotiate a contract. So I think scale is really important from the customer standpoint. It's important in terms of your cost of production too. So we're doing $1.5 billion of construction this year. That's a lot of electrical gear to buy, a lot of air conditioning equipment to buy. And clearly we get the best prices from our vendors when we do that. We also are the only investment grade rated data center REIT, so we have the least expensive cost of capital. And finally, our scale today puts us in a different zip code when it comes to attracting talent. You know, we're attracting talent today, as Jeff knows, that we would not have been able to attract a couple of years ago.
He keeps hiring people from our team. That's what he's saying. One last question. I see we have 4 minutes left, and I'll open it to the audience. Do you see in your spaces much, or across spaces, much, I'll call banding together of companies to support something, a technology? We've seen this a lot, for example, in hotels, where hotels may create a network or a website for which you can book, as opposed to booking through, you know, Expedia or somebody else. Do you see a number of companies in your space coming together and saying, hey, we want to embrace this, we think this makes sense, and we think it makes sense to do it together? Steve, do you see that in the retail side much, or not really?
We haven't seen it yet, but I think it will be coming. The cost of customer acquisition through e-commerce and any sort of venture like that is enormous, and I think you'll find real estate companies banding together to try to figure out the technology so that we can together survive and prosper in this world.
Okay. We've got 3 minutes left, so I'm going to open up the floor to any questions. Everyone is that shy?
Got somebody over there.
Oh, here you go.
Hi, my name's Andre Bueno. I run a vertically integrated real estate development company. We focus a lot on implementing technology to a lot of our processes by automating a lot of our workflows. But since that's constantly changing with whether it's new technologies or new, I guess, integrations from like an API perspective. Awesome. Should I start over? My name is Andre Bueno. I run a real estate impact fund. We have a tech arm where we've focused a lot on workflow automation and really figuring out what kind of new technologies are out there. Seems like everything's moving towards voice. As you guys are thinking about reworking your processes, how often are you guys revisiting the way you guys are structured from an operational standpoint?
Would like to take that?
I can do that.
Sure.
Well, we have a standing committee that meets weekly amongst themselves, monthly with me and the other senior members of the management team, and its sole purpose is to evaluate what's working, what can work better, how do we use new technology, is the technology paying off, what's the performance, and it's getting very granular, and then what technologies are on the horizon. How do we run them parallel with other things that we're doing to verify that they're better and should be used or should be abandoned? So it's an ongoing process, but it's ongoing. It's ever more.
And as we start thinking about how that model's changing, from us as operators, we're looking a lot at doing direct investments into robotic technology. So we have a Type 5 robotic modular company in Baltimore that we're looking at shipping panels across the country. How come you guys aren't looking at doing direct investments yourselves?
Actually, we have made direct investments. We're invested in a firm called Megaport that's listed on the Australian Exchange. It's in the software-defined networking business. So basically, if you think about data flowing, the old way that data flowed was through fiber, through pipes. Software-defined networking means that a company can plug into a piece of equipment, a large router, and then connect virtually to all of its cloud service providers. So we connect and we invest in businesses that are relevant to our own.
All right. One more question. John?
I have a question for Joel, which is kind of a unique market niche that you have. Who are your competitors, and what advantages do you think you have as a public vehicle against the other people that are trying to compete with you in your space?
So I guess the answer to that is you'd have to ask the question, who owns similar assets? And in every market, there are a bunch of different groups that own assets, but is anybody really competitive? I think the answer is they aren't, because they don't think like we think. And that's, I think, the biggest competitive advantage. I think in building any company, I would recommend everybody read How Google Works. If you think about building a workforce of the future, that's the way to really think about it. And the comment about scale, we don't think about scale. I mean, we've gone from 19 million Series A to, I don't know, maybe a $20 billion enterprise value today, but we don't think about scale so much. We think about leadership at the unit level. You know, if you go back to Jim Collins, the most effective organizations are where you have great unit leaders. You know, how do schools become good or bad? It's not the system, it's the principal, the unit leader, and I think that's where I don't think anyone can touch us as far as how we think, how we iterate our thinking, and the constant need to create great unit leaders. So that's how we think about it. We don't think about, wow, we have an asset here and somebody has an asset across the street. In a sense, it's way different in the way we consider competition. So I don't know, it's an odd way of answering, but that's how we think about it.
Okay, good. Well, I'd like to thank everybody for listening to our panel today, and I'd like to thank each of our panelists for their participation.